Hindalco's subsidiary Novelis files papers for listing in the US for a $1 billion IPO at a valuation of $15 billion. But brokerages are not enthused as the extent of the sale of shares and end-use funds remain unclear.
Shares of ABB India rally after reporting the highest quarterly revenue in the last 5 years. Shares of Union Bank also rally after a CNBC-TV18 report on the company planning a 3,000 crore rupee fundraise. Hello and welcome to this fresh edition of Markets Forward, your go-to show where we aim to get you everything you need to know, the key data points, the views, analysis as we gear up for another trading session. I'm Prashant. With me, my colleague Reema Tendulkar. Reema, hi.
Hi, and we've got lots for you in the next 20 minutes. The big news, the key developments in the Lal Street, top corporate voices, and the events to track. But first, the market action. Prashant, it started off so quiet, right? The Nifty was just not moving, and then all the action in the last 2 hours.
Yeah, I mean, usually you get a dip and that gets bought. But today it flatlined and then went down. So that's essentially the difference. There was an attempt late in the session for the market to come back. It did come back. We were down about 90 points after the dip, the early dip, starting 1:40 p.m. But that also got sold into. Not quite at the day's low, as you can see very well, but 140 points down. 0.75% is what the Nifty sold off by. Now, if you want to look at supports, it's basically nothing but the 20-day moving average. It'll change after yesterday's close, but as of yesterday, that's around 21,759. I mean, should be around there. Basically, about approximately 21,760 or so is where the supports for the Nifty should come in at. Small caps were down 1%. Mid-cap index was down about 1.3%. Advanced decline ratio was negative. Not by much. 1,500 down, 1,000 up. The big kind of talking point out of the US, remember, NASDAQ for the last 2 sessions has lost about 2%. And tonight you get earnings from NVIDIA, which has been the sort of the Pied Piper for the big rally we've seen in what is the best performing sort of pack there in the US, which is, the NVIDIA, the Meta, the AI theme, so as to speak, which has really powered gains on the NASDAQ. NVIDIA last night was down 4.5%. There was some chatter that earnings may miss. Typically, after NVIDIA earnings, we have seen for the last many quarters massive rallies develop. So could it be something different? I mean, if it is a disappointment, I think we will see a reaction once again later today. So very near term, as we come back tomorrow morning, I think that will be something to track. Reema.
And also the Fed minutes of the January FOMC. That's something that the street will be keeping a close eye on. But the last 2 hours saw the market swing quite a bit. The low today was sub 22,000, 21,998. And in the morning, the markets went on to hit record high levels of approximately 22,250. So we swung in a 250-point band, but the major action took place in the last 2 hours, finally ending at 22,055, a 140-point cut on the Nifty, the sensex down about 430 points. The mid-cap, small caps bore the brunt of the selling pressure. The mid-cap index down 1.25%, small-cap index down 1%, and the advanced decline ratio, the gap between the two opened up considerably. So by the end of it, 1 stock in the green or about 2 stocks in the green for about 5 in the red. In terms of the sectoral tilt, CPSCs were under pressure, PSUs, the Nifty CPSC index down close to about 2%. But in that, the PSU basket, particularly State Bank of India, was higher in trade. IT was under pressure, and metals managed to close up in the green by way of an index. But let's also tell you what we have for you on Markets Forward today. We start the show with the top movers of the day. Hormuz joins in. The 2 stocks that made headlines today were Hindalco after its arm Novelis filed for an IPO, and ABB India that gained in trade on the back of its Q4 results. We take you through the key reasons that led to the buzz behind the stock. And last but not the least, we delve into the key market events to watch out for tomorrow.
Okay, well, that's basically what's coming up here over the next 30 minutes or so. But first, our segment in terms of the big movers and shakers. Hormuz is here with exactly that. Hormuz, over to you.
It was HDFC Bank that came in as the knight in shining armor yesterday. It was nothing as such today. And it was IT that was the top laggard yesterday. It was IT today as well that kept the Nifty under pressure. So Nifty IT, the top sectoral loser after the media index, but almost all large cap IT stocks and even the mid cap IT stocks, all Nifty IT constituents ended lower today. Emphasis, Persistent Systems, Infosys, Wipro, Cyient, the top 5 losers on the index, not doing very well today as well. The pain also continued for Biocon. There's been not good going after the downgrade that came in yesterday. It had some 5-6 days of gains, but today it ended 2.5% lower and it's slipping towards its 50-day moving average at 268. What also did not have a very good day was Z Entertainment, and despite the stock being in the F&O ban, the stock fell 15% after various news reports that keep floating around these days over Z Entertainment. 164 now on Z Entertainment, 15% lower, reversing and a lot more of Wednesday's gains. Coal India continues to remain under pressure. Government officials setting ambitious targets for the company, but they are struggling to meet them. Third day of losses for Coal India, another 3% gone there today. But what was bucking the trend though today was real estate, and the index did well yesterday. It's done well today as well. Soba, Phoenix Mills, DLF, Prestige Estates, Godrej Properties. The good bit is that most of them sustained around the highest point of the day and continued to hold on to their gains. Soba, the top performer there, 6.5% higher. And an outlier, a stock that has done very well over the last few sessions, is Tata Investment Corporation. 7th day of gains in today's trading session. Another 10.5% today, almost 6,500 now, and it's up 50% so far this year. Back to you.
Okay, the stock went unnoticed. Tata Investment, thank you for highlighting it. 50% up in the last couple of days. But let's invite our guests on the show, Mayuresh Joshi of William O'Neill and Shrikant Chouhan of Kotak Securities. Gentlemen, thank you for joining in. Shrikant, first, your thoughts on the day so far, and what is the trade for tomorrow? Any particular stocks that come to your mind?
Yeah, afternoon. I think, the market is like, it was consolidating at higher levels, but eventually we saw a clear-cut drop in the market and it closed at the lowest point of the day. So we may see furthermore decline if it breaks the levels of 22,000, because 22,000 is acting as major support for the market in terms of option statistics as well as extensions. But at the same time, the market is having next important leg of support at 21,900. So possibility is that below 22,000, we may see the levels of 21,900. But this market is the market of buying on dips. And our strategy should be to look for adding position if there is any reversal formation in the market, or to take contra trades. So tomorrow, maybe after the minutes, if we see the market is opening somewhere close to 21,900, then that time we should look for taking contra bets in the market. And again, we can expect 22,200 on the high side. But the real action will come if it crosses 22,300. So maybe market is going to consolidate. That's the overall view. But buying on dips should be the strategy. Bank Nifty was quite resilient, and we should look for adding some positions from the BFSI sector.
Mayuresh is also with us. Gentlemen, Shrikant, good afternoon. Mayuresh, just a comment. I mean, Mayuresh, you follow sort of price action, etc., also pretty closely. What do you make of the? I mean, it's not even a 1% pullback on the Nifty, but because you've done so well, especially on single stocks, you can come off 5, 7, 10, 15% very quickly. Just your comments.
Afternoon, Prashant. Afternoon, Rima. Afternoon, Shrikant. So two things as we see that MarketSmith India. I think the distribution day count, you obviously had one today because of volumes being higher than yesterday and the massive fall that you've seen in the broader markets. But the distribution day count stands at 4, which means that it is still okay at this level. Obviously, I think the key levels, specifically from an index perspective, 21,600 odd, where the 50 DMA is at 21,700 odd, where the 21 DMA is, which we very closely track, along with an elevated distribution count. So in the next few days, if the DD counts or the distribution day count increases beyond 4, and these averages are breached, a large part of that assumption would be that most leaders or most leading sectors would also exhibit a similar trend along with the leading stocks within that as well, which might then lead out or play out of that assumption that a further fall might be on the way. So we'll very closely watch out for those levels and be very selective at adding stocks.
Okay. Got that. Mayuresh, you said distribution day 4. Sorry, briefly, what does that mean?
So at William O'Neill, what we've got is a distribution days where the index falls 0.2% or more with volumes than the previous day. So in a 21 or a 25-day trading cycle, if the distribution day count goes beyond 4 on 5 as per our cancel-in methodology, and these key moving averages are breached, what we've historically seen in the past, not just in the Indian market, but global markets as well, the markets do come under some sort of a pressure, and we do downgrade the markets in terms of price action, which ultimately gets followed with some cues that you probably have at a local and a global level, followed by some element of earnings degrowth as well. So if that element keeps on moving higher within that restrictive time frame, I think you've got some serious issues as far as the market talk is concerned.
But not yet, as you said. Just coming back to you, but let's focus on the first stock of the day. Shares of Hindalco were in focus. Its subsidiary Novelis has filed for an IPO in the US. We learned from sources that Hindalco is expecting a valuation of $15 billion for that company. Nigel is joining in to explain what this means for Hindalco and what the street is making of it. Nigel, take it away.
Well, that's right. Hindalco opened up, gap up, but couldn't sustain those gains. So let's explain this to you. First up, the news space, they're looking to list Novelis via the IPO in the United States. The rough valuation could be, since Novelis has a bit of around $2 billion, you give it a multiple of around 6.5 times, you'll get a enterprise value of around 12 to around $13 billion. But keep in mind, they have around $4.5 billion of debt. So effectively, you could have your equity value that could be roughly around $8 billion. Now, the questions remain unanswered, though. Why is Hindalco looking to do this? Why do they need the money? Where will they deploy it? That's going to be the big question. And how much stake are they willing to dilute in this particular IPO? So those are the key question marks which we'll be waiting by for answers. But why did the stock not sustain the gains? I'll give you a few reasons. The street would have preferred if there was issuance of fresh shares rather than the promoter entity coming and selling some shares. The smaller peer is Constellium, and it trades at around 5.5 times EV per EBITDA. Remember, we're talking about giving Novelis 6.5 times. So we're giving it its due since it's a larger player. We're giving it a little bit of a premium multiple. The potential tax outflow as well could be a bit of a hindrance. And also, post-listing, that could be a holding company discount, which will hurt them. And finally, if the FIs, they have 25% stake in Hindalco. If Novelis lists, they'll say, why to buy Hindalco? Since bulk of the profitability is coming from Novelis, I'd rather go and buy Novelis itself. Brokerages, Phillip Capital came out with an interesting one. They cannot rule out the possibility of this money going towards Vodafone Idea. That will be a big negative, but that's what they have pointed out. Investec, though they remain positive on the stock, they see little reason to cheer the listing. And Nuvama, they have a hold rating. They say that, in fact, the sale of shares by the promoter entity, it doesn't provide a big case for re-rating. So explains why the stock opened up, gap up, but couldn't sustain the gains because there are various question marks on why is Hindalco doing this particular IPO. Back to you guys.
Okay, thank you very much for that. Let's also address the second stock of the day, and that's ABB India. It rallied 10% after reporting a good Q4. Revenues up 14%, the highest that we've seen in the last 5 years. Record high order inflows also in the calendar year 23. Vamakshi is now joining in with the key numbers. Vamakshi?
Well, yes, absolutely. Like you rightly pointed out, revenue saw an uptick of almost 14%. This was slightly lower than what we were working with, but nevertheless, it is the highest ever Q4 revenue that the company has reported in the last 5 years. This contribution came from all segments barring process automation. But when we look at the revenues on an annualized basis, the revenues have actually hit a record high and have surpassed the company's own guidance of 10,000 crores. Operationally also, the company performed better than anticipated, and this was largely driven by better cost absorption and increased volumes. In the fourth quarter itself, EBITDA margin contracted sequentially to 15.1%. While this was on expected lines, the quantum of the decline was lower than expected. So definitely a positive out there, and in fact the management in the con call also guided for double-digit margin to continue ahead as well. Not just that, they've also managed to report the ROCE at almost 21%, which is a new all-time high level for this particular metric. Apart from that, the order inflows were also quite strong. Record high orders of 12,319 crores were reported in the year gone by, with strong contribution coming from large orders. In fact, order backlog at 8,400 crores provides very good revenue visibility as well for this counter, and they've also mentioned that large orders form nearly 15% of the order backlog as compared to 7 to 8% that we saw earlier. Process automation orders in Q4 were deferred, and as a result, the orders will now be coming through in the first quarter. And in fact, the management has also said that the order book from this particular segment is expected to be quite robust going ahead. Overall, the company reported strong order inflows, better than expected profitability, and in the con call also they highlighted that in the near term they will be mindful of several countries holding elections, including India this very year, and therefore there could be some delay in decision making in the near term. But overall, the management sounded quite optimistic when we look at the long-term picture.
Thank you very much for that. Mayuresh, just come in first on Hindalco. The stock ended flat, off 5% from the day's high. If you were to hazard a guess, what is the company going to do with the money that they're going to raise post this IPO? What would your thoughts be?
I mean, if I were to be very optimistic, Rima, I think the money should get deployed back into the capex plans that Novelis has. But then why would you probably take the money on your own books? I think that is something that also needs to be seen. I think the worst case scenario, as Nigel mentioned, is infusing this back into Vodafone Idea. So I think the end result is really something which is unknown at this point of time, and that is really what is spooking the street. Obviously, the core numbers that Hindalco is working out with when it comes to its India upstream and downstream operations seem to be far more stable as we head into the next financial year. And even Novelis on its own accord expects EBITDA per ton to actually improve in the next quarter to around $525 a ton, and even improve that to $600 in the next few quarters. So operationally, might be good synergies building in. But till we know the end result on what this can get used for, I think that remains a big overhang on the stock.
Okay, no, got that. Oil marketing companies have been rallying, right? And they've been rallying hard after upgrade from brokers. But today we had a bit of a downgrade. Spark vendors, institutional equities, asking people to put on the brakes as far as OMCs are concerned. Vivek is here to quickly recap what they're saying. What's the point they're making, Vivek?
Well, you're absolutely right. After a whole host of upgrades coming in, now what's happened is that Spark institutional equities are turning quite cautious on the entire oil marketing company space. They have a reduced rating as far as BPCL is concerned. They have sell ratings on both HPCL as well as IOCL. What they're saying is that the diesel and GRM cracks, which are at all-time levels, leading to increased profitability. They believe that that particular trend may not sustain further. They believe multiple data sets suggest easing of the diesel supply, and in turn they believe cracks could revert back to less than $20 a barrel from the $26 a barrel that it is currently trading at. They believe that the maximum impact of the Red Sea disruptions are already in the price, and from here on cracks should only go lower. What they're saying is that stocks have now started pricing in $9 to $10 per barrel of GRM, and this is something that they believe makes the risk reward slightly unfavorable at the current level. So overall, slightly cautious, booking profits, and in fact sell rating on HPCL and IOCL.
Vivek, thanks very much for that. Briefly, Shrikant, to you first, price action wise, how are these looking? If you get pullbacks, and maybe we will get pullbacks, do they become, would you look at them as opportunities to buy? If you own them, what would you do?
Hey, Prashant, the stock has fallen from the highs. I think it is better to wait and see that whether they can manage to surpass their previous highs or not. But in this pack, if we see any specific stock, then Indian Oil Corporation looks really strong. It is correcting, but the volumes are lesser. And whenever there is like a recovery in the market, we see a gradual sort of activity in this stock, Indian Oil Corporation. So if like someone is really interested in buying any stock from the basket, then IOC looks really good. BPCL looks weak at these levels. I think the stock can fall further more from here. It can fall to the levels of maybe 580 or 560. So from here, the dip cut is expected from BPCL, but IOC looks really good. And the real trade will come if it crosses previous highs.
Okay, we'll leave it there, gentlemen. Thank you both for joining us here, Shrikant and Mayuresh, and running us through those views across sectors and stocks. Appreciate it. We'll take a quick commercial break here. We'll come back and get you some top corporate voices that we got through the course of the day, what they said. That's coming up in just a bit.
Welcome back. Let's now take a quick note of the top corporate voices of the day. Jubilant Food announced the grand opening of the iconic chicken brand Popeyes at Chandni Chowk in Delhi. CEO Managing Director Sameer Khetrapal said the company will achieve a revenue of 1,000 crore rupees once they hit 250 stores. And they expect to hit 250 stores in the next 2 to 3 years. He also added that the new opening of Popeyes will be the speedboat to scale Jubilant higher.
We also had the management of Power Finance Corporation. The chairman and managing director of the company, Parminder Chopra, expects AUM growth of between 13 and 15% for the foreseeable future. She also expects 2 more assets, namely troubled assets, Lanco, Amar Kantak and Shikha Energy, to be resolved this quarter. These are large, lumpy, chunky assets, and resolution perhaps would lead to inflow of money into the company. That'll be good for PFC. All right, well, that's corporate voices, right? But we also had a few big market voices today. So one of the largest foreign investors in India is GQG Partners, and we had Rajiv Jain talking to us, who said that India is seeing the best earnings growth amongst most emerging markets, and this has been true for the last 5 years. He went on to add that the place to be perhaps most worried about in India is mid-caps, adding that 10 to 15% pullbacks there perhaps should be seen as routine, nothing to be worried about. He described them as a pause that refreshes. He added that GQG did not participate in the recent Vedanta block deal, as many news reports had pointed out. He is and remains very bullish on Indian airport assets.
Meanwhile, Jonathan Garner, Chief Asia and Emerging Market Equity Strategist at Morgan Stanley, says India is a strong secular bull market and is in a virtuous cycle of strong growth, strong capex inflows and earnings growth. He did say valuations are expensive because Japan's return on equity is 10%, whereas India's return on equity is higher at 16%. He is confident that India's compounded earnings growth of 20% will sustain over the next 3 to 5 years. Okay, and before we wrap, we bring you the key market events to watch out for. Abhishek is here with that list.
Well, Rima, to begin with, the key factor to watch out is that US market over there, Jan FOMC minutes will be coming out. So that will be a key important event to track. NVIDIA earnings will be there. So NVIDIA earnings will be a key factor to watch out as well. In terms of India, tomorrow HSBC manufacturing PMI will be coming out. And there will be also S&P global manufacturing PMI from Great Britain. So we'll watch out for that as well. In terms of some of the other things to watch, stocks level, Mass Financial over there, bonus issue of 2:1 will be there tomorrow. Tidewater Oil interim dividend of ₹12 per share will be there tomorrow. NHPC goes ex-dividend tomorrow, so watch out for that. Companies are attending various conferences. So at Kotak conference, you have Glenmark Pharma, Vijay Diagnostic, MTAR Technologies, as well as Sira Sanitaware. In terms of EGM, tomorrow you have Fedbank Financial Services and Capri Global, who will be holding their EGM tomorrow. Back to you.
Abhishek, nice long list. Thanks very much for that. Well, that brings us to a wrap on this edition of Markets Forward. From all of us here, it's goodbye. But news and updates follow here on CNBC TV18. Stay with us.